I think that what you're seeing is essentially a pushback against the establishment in a really important way.
Billionaire traders are freaking out after Reddit users screwed them over. Now, Reddit here, as I'm going to get to, has sort of in a way democratized the stock market. So this is a story really about the people coming together and fighting against the giants and winning. So I also have a clip coming up later from CNBC that goes a bit deeper into that. But first, let me try and explain what the hell went on here. So it all starts with GameStop. So if you have not seen, this is GameStop's stock right now. So about a year ago, trading at about $3, $4, and over the last month, it is now up to $3.26, $3.27. So it keeps changing, but it's doing pretty well right now. Here's a closer look. So as I say here, much of last year spent between $4 and $6 before turning into this. Now, you may wonder what the hell went on here. And this is a rise of about 2,200% since April. Now, this is where we get to Reddit. So Slate has a good piece here. I link to all my sources below the video, so you can go read through this if you want. But they say here, what the hell is going on with GameStop's stock? How an army of Reddit users massively inflated the price of a flailing video game chain, in no small part to stick it to Wall Street. Now, before I quote this piece here, it all starts with Ryan Cohen. So Ryan Cohen is a well-known investor. He took a 13% stake in GameStop in August. In November, he blasted the CEO for basically squandering billions and not doing enough to put investment into digital sales. And then in January this month, GameStop appointed Cohen to serve on the board. And then this then led to a 50% surge in the stock. So far, everything is pretty typical. But now, short sellers saw this and thought, hey, we can make some money here. So short selling is basically investors making money off betting that the stock will drop. So they see that there was a surge of 50% only because of Ryan Cohen's appointment to the board. They figured this is going to be short term. GameStop's business model hasn't changed, so it's going to drop. So they're betting that GameStop basically is going to fail. But this is where Reddit now comes in. So one group that noticed the shorts on the stock was Reddit WallStreetBets. The Wall Street speculation community has more than 2 million members, hundreds of thousands of whom who are online at any given time, to say nothing of lurkers. In September, an enterprising subredditor had posted a 7-page treatise titled Bankrupting Institutional Investors for Dummies, featuring GameStop. The subredditor noted the stock already had a significant short exposure months before Cohen joined the board, and predicted that short sellers would be forced to abandon their positions and, in buying back their stocks, drive the price up. Reddit WallStreetBets users delighted in the idea and took it as a chance to egg one another on. Now, before I get to the mindset of many of these people who were involved in this, I just got to show you an example here of one person on Reddit who made a ton of money. So they put in a six-figure investment at the beginning of this, $770,000, have come out with almost $14 million. So if you had put a big six-figure investment at the beginning of this, right now you'd be up about $13 million. Amazing. Now, let me show you, ultimately, though, the mindset of what this was all about. So others just wanted to screw short sellers, who are by definition rooting for shareholders and companies to suffer. They're also often considered to be sophisticated investors cast against the determined amateurs populating internet forums. At the end of November, the subredditor ascertained that hedge fund Melvin Capital Management was shorting GameStop, and the community rallied with fury against the New York-based fund. Quote, when these boomers made their bets, GME wasn't a big thing on WSB being the Reddit page yet. One poster wrote, quote, I don't feel bad at all taking money from these rich, greedy hedge fund managers. Quote, they're not even playing with their own money, another wrote. Quote, I'm an old millennial. I'm tired of getting screwed by the globalist elites, said another. This isn't left or right Republican or Democrat. It's the 1% versus everyone else. So the mindset here basically is, hey, Wall Street screwed us. We're going to screw them back. And that's exactly what happened. So GameStop short sellers Melvin Capital and Citron surrender bearish bets after 700% rally drives huge losses. So these short sellers were forced to get out. And it's unclear how much they actually lost, but CNBC saying here They cannot confirm the amount of losses Melvin Capital took on the short position. Citadel and Point72 have infused close to $3 billion into Gabe Plotkin's hedge fund to shore up its finances. So, unclear how much they lost. They apparently are not filing for bankruptcy, though there's been some claims about that, but maybe close to $3 billion. So, regardless, they lost big here. They bet on GameStop failing, and it went the complete opposite way. Now, I want to play here a clip from Chamath Palihapitiya. So he is somebody who is a wealthy investor, but his positions are, for lack of a better term here, more progressive. He often is in debates with people on CNBC fighting against big business, or at least the mentality of big business. So here he is on CNBC discussing this.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into WallStreetBets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up.
I have a hard time believing. You suggested that there's, a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things.
There's a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era, right? But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds that follow along.
So that was a pretty good breakdown there. You sort of see the rage from the billionaire hedge fund manager perspective coming out of the host, pushing back on Chamath Palihapitiya here. But ultimately, this is about the little guys winning. And the big billionaire hedge fund managers are unhappy that they no longer are in complete control of the market. Well, that's the free market. You lost. So be it. Now, let me show you just some of the reactions here and responses online. But first, TD Ameritrade cracks down on GameStop and AMC trade. So right now there appears to be some, attempts here to try and limit the damage done by this by some larger traders. But Also here, as Disclosed writes, just did NASDAQ threatens to halt stocks over social media chatters. So you see the kind of freak out going on now that the people have taken control. Other reactions here to the reactions from the billionaires. So Beth Lynch here tweeting out, quote, "No, only billionaires can manipulate the market," with a crying meme. You often see this meme right here representing the billionaires crying about their losses. Snap Language here tweeting out, "Will hedge fund managers learn to code too?" Hashtag GameStop. This one from VicChart posting the increase in the share price with a middle finger. I think it's clear who the middle finger is to. And this open letter from the moderator of the Wall Street Bets subreddit to CNBC. So I'm going to read this. It also gives you a great window into the mindset of these individuals. "Before you spend another day hosting your shill hedge fund buddies to come on the air and demonize Wall Street Bets, I hope you read this. Your contempt for the retail investor, your audience, is palpable, and if you don't get it together, you'll lose an entire new generation of investors. I keep thinking about these funds that are short GME like your boys at Melvin Capital / your coverage of this subreddit, and I'm getting madder and madder. These funds can manipulate the market via your network, and if they screw up big because they don't even know the basics of Portfolio Risk 101 and using position sizing, they just get a bailout from their billionaire friends at Citadel. Then they have the nerve to turn us into public enemy number one just because we believe in an underdog company getting a second chance. We don't have billionaires to bail us out when we mess up our portfolio risk and a position goes against us. We can't go on TV and make attempts to manipulate millions to take our side of the trade. If we mess up as bad as they did, we're wiped out, have to start from scratch, and are back to giving HJs behind the dumpster at Wendy's. Seriously, MF these people. I sincerely hope they suffer." So that I think is a clear window into the perspective here and how they feel about the billionaire hedge fund managers. One last thing here. This doesn't just begin and end with GameStop. So last year, apparently there was similar events with Hertz and Kodak. And now stocks like AMC, Nokia, and BlackBerry, as they say here, which is, yes, still a business, have also caught Redditors' fancy. So this is something that will likely continue. And as you're seeing, it's not like they're just buying up this and then selling. They are still in it. I mean, it is staying steady here. So we're going to have to obviously, see how this looks in a few months. But, man, they have taken control of at least some of the market here from these billionaire hedge fund managers, and I'm just enjoying watching the show.